Hello everyone, I'm Shah Jalal, a supply chain specialist. Today I will talk about the differences between UPAS and Deferred Letter of Credit. Because of some similarities between UPAS and Deferred Letter of Credit, the concept of Deferred Letter of Credit is often confused with the UPAS Letter of Credit. Some similarities are: number 1, both types of letter of credit allow a prescribed credit period for the buyer. Number 2, both types of letter of credit allow the buyer to import goods at relatively lower finance cost. Number 3, the objectives of both types of letter of credit are the same. Number 4, both types of letter of credit is called as Usance Letter of Credit as well. Let's see now in the video screen what the differences between UPAS and Deferred Letter of Credit are. Differences in terms of definition. The deferred letter of credit is a type of letter of credit where the salary is paid on a specified future date by the buyer through the used banking channel. Contrariwise, the UPAS letter of credit refers to a letter of credit type where the salary is paid on a side basis from the funding bank, but the funding bank is refunded by the buyer through the LC issuing bank on a specified future date. In terms of credit facility, in the deferred letter of credit, credit facility is provided by the seller. On the other hand, in the UPAS letter of credit, credit facility is provided by the funding bank. In terms of credit type, the deferred letter of credit is the seller's credit with the buyer and it's a traditional letter of credit. Contrariwise, the UPAS letter of credit is a credit of funding bank with the buyer and it's a hybrid letter of credit. In terms of credit mode, in the case of a deferred letter of credit, the seller allows a credit for an agreed time period to the buyer. Contrariwise, in the case of UPAS letter of credit, the funding bank provides a loan facility for an agreed credit period between the buyer and seller. Differences in terms of seller's payment. The deferred letter of credit is a usance letter of credit payable to the seller on a specified future date. On the other hand, the UPAS letter of credit is also a usance letter of credit payable to the seller at side basis. In terms of interest, when a seller offers the deferred letter of credit for a credit period to sell his products, the said seller adds the interest with the actual price of the products as he will be paid on a specified future date. On the other hand, when a seller agrees to take the UPAS letter of credit for a credit period to sell his products, the said seller doesn't add any interest with the actual price of the products as he will be paid at sight. In terms of interest rate, in the deferred letter of credit, the seller adds the interest with the actual product price for the agreed credit period according to the prevailing interest rate of the seller's country. In the UPAS letter of credit, the buyer pays the interest to the funding bank with principal anywhere across the world as per the agreed rate with that bank. In terms of funding bank, no funding bank requires in the deferred letter of credit. Contrariwise, the funding bank is must for issuing a UPAS letter of credit. In terms of negotiation, in the case of deferred letter of credit, the seller can negotiate with any bank of his country except exception. On the other hand, in the case of UPAS letter of credit, negotiating bank must be restricted if the fund is provided by any bank other than the offshore banking unit OBU of the LC issuing bank. In terms of discounting, in the deferred letter of credit, the seller can get the fund earlier of the maturity date by discounting the bill of exchange from the bank according to the necessity of his own. On the other hand, In the UPAS letter of credit, the seller has no option to discount the bill of exchange as he is paid at side basis by the funding bank. In terms of necessity, the situation of deferred letter of credit happens when the seller doesn't need any immediate payment for his goods. On the other hand, the situation of UPAS letter of credit happens when the seller wants to get immediate payment for his goods, but the buyer may not have the facility with his bank to issue the LC at side basis. In terms of origin, the deferred letter of credit is one of the standard letter of credit types. Contrariwise, the UPAS letter of credit is a derivative form of the standard letter of credit types. It's actually the combination between side and deferred letter of credit. Thank you, no more today.